Welcome traders, and this is Vagabond Investors Market View May 16th. The way I like to start my trading week is to have a quick look at the weekly ETF charts to find the trend we are traveling at the moment. Let's first have a look at Spider SPY. It's closed below our trend line and it's absolutely a bearish sign. It's still trading on a green mode, but this might very well test our 40-week aka 200-day moving average in upcoming weeks. So keep your eyes on this one. And Europe, Euro Stocks 50 still on red mode. Erased almost all of the last week's relief rally after the bailout package. Pretty much the same story on Germany. It's still on yellow mode. And our Italy, the same story. Erased all the gains, Monday gains, still in red mode. And Spain, nothing new here. And France, okay, rules were pretty much the same. United Kingdom still on yellow mode. Also tested 40-week, failed that test and is looking down. Asia market starts from India, trading on green mode, still trading above our trend line on a weekly chart and also above our 40-week moving average. South Korea still on green mode. Doesn't look as sick as the other markets, but assuming that at the moment markets are quite correlated, I would be careful with the Korean market also. And Thailand is forming a kind of bear flag, and breaking below the bear flag formation might propel us some kind of downward spiral, looking for a test at 40-week moving average zone. Alright, and Japan changed from green mode to yellow mode during the week, closed below 200-day, which is 40-week moving average, still above our trend line. And Singapore ETF on a green mode, still trading above its 40-week, quite exactly at 20-week moving average at the moment. Very interesting to see what the upcoming week will bring for this market too. And China ETF still trading on yellow mode, even if it backtested 40-week moving average and failed that. That's very bearish sign there. And Australia ETF still trading on yellow mode, testing our lateral trend line. Doesn't look too bullish to me, but the markets will tell us if the bear market will officially begin here too. Of course, our definition for bear market is this red indicator. It's more conservative than the usually used 200-day crossover, price crossover below the 200-day moving average. Our 20-week crossover with 40-week makes some time delay, so this makes it a bit more conservative way to measure it. And South Africa ETF clearly on green mode, trading above its 200-day, like a 40-week moving average, and also trading above our 40-week, our trend line drawn from May 2009. Brazil tested 40-week, failed that test, closed below it. It looks very bearish to me, still on a yellow mode, indicating change, possible change in upcoming weeks. And Russian ETF testing its 40-week EMA after breaking down from this upward sloping channel. Still on a yellow mode, but this will be interesting to follow what happens next week. And commodities, gold, green mode, very strong bullish move, tested it, its all-time highs, closed above it, very bullish. And our old oil play USO crossed below its trend line. Last time we spoke about possible bounce play here, but at the moment it's more bearish than a bullish move, so I recommend you to be very careful with this. This might be changing its character at the moment, and that of course changes the rules of the game, and we are not anymore playing this channel play here, but it's something else. And possible backtest of previous trend line will show us if the bulls are still behind the steering wheel, or are the bears really taking the game with them and running the market slower. Oil is a leading sector, it's a leading indicator somehow. If we see a character change here, it might easily indicate that there is more problems in the markets, and that's not a good sign for bulls, but it doesn't matter for us because we're not biased to any side. We are not biased to bulls, we are not biased to bears. We don't care, we trade it as it is, and that's the way the game goes here. Alright, silver market is very strong. It broke out from its previous consolidation period here, consolidation or resistance zone. It's still below its 2008 highs, but the upcoming week will show us if the bulls are still strong here and are we chasing the old highs. Alright, folks, like always, trade with a plan, be careful, it's very dangerous out there, and try to keep fun, keep it light, trade carefully, and we'll see you next week.